massive buying is pouring into spot Bitcoin ETFs. Short-term holders are signaling that Bitcoin isn't overextended to the upside, and many of them are even selling at a loss, while long-term holders appear to be confirming fresh accumulation. In this video, we'll dive deep into the blockchain data and the charts. Meanwhile, did you catch what just happened? SWIFT, the network that moves more money than any other on the planet, announced that its new global payment system will run on Ethereum using the Linea Layer 2. Yes, the same SWIFT that connects more than 11,000 banks worldwide. And they're not playing around. Bank of America, Citi, and JP Morgan are already in the pilots. This isn't a crypto startup taking a shot, it's traditional finance stepping squarely into blockchain. At the same time, in the US, regulators are starting to ease up. The FDIC is reviewing rules that for years kept banks away from crypto companies. And as all this unfolds, the Chicago Mercantile Exchange plans to operate crypto markets 24/7 starting in 2026. Banks, regulators, and the world's largest exchanges are on the move, and they're all heading in the same direction. Let's start with SWIFT, the network that connects thousands of banks worldwide and moves more than $150 trillion a year in cross-border payments. The institution just took a historic step, announcing that its new blockchain-based payments platform will run on Linea, an Ethereum Layer 2 developed by Consensus. The confirmation came from Joe Lubin, Consensus's founder, during the Token 2049 conference in Singapore. Although SWIFT didn't initially reveal which technology it would use, we now know Linea will be the base for a crypto payment system operating 24/7. This shift could completely transform how banks settle transactions, delivering deeper liquidity, around-the-clock availability, and fewer intermediaries. And it's no small pilot. Bank of America, Citi, JP Morgan, and Toronto Dominion Bank are already involved in the tests. By choosing a Layer 2 like Linea that uses ZK Ethereum virtual machine rollups to cut costs and boost speed, SWIFT positions itself as a direct competitor to Ripple while leveraging the global reach and security of the Ethereum ecosystem. Joe Lubin even spoke about something more ambitious, a user-generated civilization, where communities can create and govern their own financial applications on top of this digital infrastructure. It sounds futuristic today, but with moves like SWIFT's, it's starting to feel much closer. However, while innovation races ahead on the tech side, the regulatory front remains tense. In the United States, the Federal Deposit Insurance Corporation, the FDIC, is preparing a key debate on new rules that could reshape how banks work with cryptocurrency companies. The core issue is the use of so-called reputational risk, a criterion that, according to several analysts, has been used as a pretext to keep banks from serving businesses linked to digital assets. Travis Hill, the acting chair of the FDIC, acknowledged that this approach may have been applied unfairly, limiting the crypto sector's access to basic banking services. The debate gathered steam after President Donald Trump signed an executive order to guarantee free banking, warning regulators not to use reputational risk to impose discriminatory policies. Although the document doesn't directly mention cryptocurrencies, many interpret it as a response to what the industry calls Operation Checkpoint 2.0, a supposed campaign to isolate the crypto sector from the financial system. Amid a complicated political climate, with the US government facing a potential partial shutdown due to the lack of a budget deal, the FDIC says it will continue operating as normal, and if the new rules are approved, they could open the door to a more stable and transparent relationship between banks and companies in the digital asset space. While regulators debate and banks experiment with blockchain, markets are also bracing for a major shift. The Chicago Mercantile Exchange, one of the world's largest derivatives exchanges, announced plans to offer crypto trading 24 hours a day, 7 days a week, starting in 2026. Up to now, even crypto futures on the CME pause on weekends and holidays, which contrasts with the non-stop pace of the global crypto market. According to Tip McCord, the CME's global head of alternative products, the goal is to provide a regulated environment that keeps up with that pace and lets investors trade with confidence at any time. The proposal still needs approval from the CFTC, the US derivatives regulator, but the intent is clear. The biggest players in traditional finance are gearing up for a future where markets never close. In the words of CME's own CEO, Terrence Duffy, the market will demand 24/7 trading sooner or later, and cryptocurrencies are the ideal vehicle to drive that change. Without a doubt, the long-term outlook for crypto is highly promising, as greater liquidity will be injected through CME's regulated futures market. During this transition, correction and adaptation phase. As the Chicago Mercantile Exchange's own crypto futures market grows, what that will favor is an increase in demand for Bitcoin. On the other hand, seeing the banking system yield to blockchain technology, something that in my view is long overdue, seems to be key to understanding that blockchain and cryptocurrencies are here to stay. Now let's move to the on-chain analysis and look at the following. Notice how Bitcoin ETFs have spoken. Over the past week, we've observed a significant influx of capital. Basically, in the ETF market, Bitcoin is being bought. It's way too simplistic to say only big institutions buy ETFs, therefore, whales and institutions must be buying. It's not that simple. You yourself could buy a Bitcoin ETF and show up on this chart, and that's something we really need to keep in mind. Even so, it's still a positive signal because without a doubt, many institutions are investing through these ETFs, and at the end of the day, the volume we retail investors move is frankly tiny. All of this lines up with a euphoric moment because we're in October, and if you look across Bitcoin's entire history, we've only had a couple of negative Octobers, the first in 2014 and the second in 2018. That first negative October back in 2014 was nearly minus 13%, but remember the market's extreme volatility at that time. So let's focus on the negative October of 2018, which was only about minus 3.7%, while every other October has been positive. Statistically, October is a very good month for Bitcoin, and so far this one has us up by roughly 4%.
You're now looking at an on-chain chart called the short-term holder realized value to transaction volume ratio, which basically measures the relationship between realized value and the daily transaction volume on the network. So what exactly does this orange line track? It shows how hot or cold the Bitcoin market is, but only for those who bought recently. We're talking about coins with a holding age under 155 days. Right now, that orange line is sitting near the lower end of its range. That means recent buyers are either underwater or just breaking even. At the same time, it signals weak appetite to buy. People are probably scared. We know this by cross-checking short-term holder behavior with daily on-chain transaction volume. If network activity is low, it tells us the desire to transact is extremely low. Therefore, what we're seeing is that Bitcoin longs, those we classify as short-term, are in losses, or basically at break-even. At the same time, the network is barely moving, which tells us there's little appetite to buy. And you already know one of the key requirements big institutions look for before starting a move, an upside move in this case. It's simple. Retail needs to be sleepy, with no desire to start buying, so institutions can make the move on their own. And sure enough, short-term holders are now selling at a loss. If in the previous chart we saw retail long positions nearly capitulating, here we're seeing they're already starting to sell underwater. Another essential condition for potentially kicking off an upside leg in Bitcoin. None of this guarantees it will happen. Markets don't work that way. But we're starting to see a shopping list of signals that justify at the very least holding an optimistic view on the crypto market based on everything we're observing. Now, if we add the net position change of Bitcoin's long-term holders to the mix, look at what's happening. First, some context. In short, when the histogram is red, it suggests large institutions are selling Bitcoin. When the histogram is green, the opposite is true. Whales and big institutions are accumulating long positions. Of course, you might think if it were that easy, then this looks like distribution, so Bitcoin should collapse. And here's where the real damage comes from analyzing blockchain data without much understanding of how financial markets behave. There is no holy grail, no indicator that tells you exactly when, how, and what will happen in the market. So be very careful whose on-chain metric analysis you listen to, because the neat theoretical explanations used to interpret these charts often don't work in practice, and those are the theories people commonly rely on. What we're going to focus on instead is the following. Notice how the net position change for Bitcoin's long-term holders is now in an upward phase. Basically, we can say that during the last drop, they were actually buying. Let's take an example that goes the other way. During that phase, we were in an accumulation point. Someone could look at it and say, hey, look, it turns red, which means price is going to start distributing and must fall immediately. But as you can see, nothing could be further from the truth. In that phase, they accumulated to push the price higher. For example, in this shift, we can see how the accumulation process started at this crossover, the price continued falling, obviously to accumulate, and then it began to rise. What we can also conclude is that this supposed distribution phase, supposed because everything remains to be seen, could fail, and that this might actually be a reaccumulation phase. Just imagine, all this alleged distribution, all this alleged selling, what would happen if a black swan event hit and destroyed the creek? Just think about this. All that selling gets blown to pieces, and we get a massive black swan move that propels us sharply to the upside. Now let's cross all of this with Bitcoin's traditional chart. I'll start by saying we've already triggered that black swan move I mentioned a moment ago. It's happened, and we're at all-time highs. We'll break it down in a second, but first,
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting saying, this community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
Let's keep going. If you've been watching Crypto Insight lately, you've noticed we've been optimistic for a long time. In fact, we were optimistic while waiting for this market trap, a trap that would set up a strong, impulsive move higher. Now, with everything I've explained, fundamentals, on-chain data, and how smart money manipulates price so we can track it, here's the bottom line. This black swan move is key. Bitcoin is doing what it's supposed to do, push higher. It's hard for me to believe the average retail investor is asleep, but sadly, that's the reality. They pulled it off. Think about this. Why do you think from July 15th to September 26th, they kept us chopping around here, making retail completely forget Bitcoin even exists? Then suddenly, almost like by chance, they trigger a strong, aggressive, bullish impulse that wiped out the entire corrective phase with no effort. I'll sum it up. After everyone turns bullish on Bitcoin, and I put quotes on everyone, because even in this last impulse, retail really didn't buy it. Institutions create a market pause, a corrective pattern, so retail loses patience and forgets. And when they've finally given up and moved on, that's when the big upside journey begins. I hope this context is sinking in, because it's key to understanding market dynamics. Just like we were speculating back here, if you follow Crypto Insight, you'll remember, is how we were evaluating that this distribution phase could head toward a one-to-one target on Ethereum, with a chance, of course, if they wanted to reach the defense zone, but the one-to-one target was on the table for a clean pivot. The key after that was to reclaim the creek decisively. That's exactly how it played out, which invites us to stay positive on crypto. I'm going to sound like a broken record. We've been calling this since the lows. Look at XRP. We broke the advanced trend line I believe they're working with, and now price is getting close to breaking a creek. We don't have it yet, but watch out if we do. If we break this creek with conviction, my friend, lights out. Now, look at Solana, how it worked a sudden bullish accumulation process we had flagged as a real possibility. We mapped this creek before it broke, considering that a V-shaped reversal could occur because we labeled it as accumulation. It's not something we do often, calling such an immediate V, because those ideas usually go wrong. But as you can see, thanks to cross-analysis, we could tell this was a very plausible scenario. Of course, looking at Solana, we remain bullish. BNB is basically screaming it in your face. All-time highs and a rocket strapped to it. What more can you ask from this asset? We had already been saying BNB looked exceptionally healthy. Sound familiar? All right, I'll wrap it up here by showing you the break of a micro creek on the total market, confirming crypto's bullish trend. Let's stay positive in this market. And if you enjoyed this advanced technical analysis, give the video a like, subscribe to the channel, and click the bell so YouTube notifies you of future uploads. Good luck with your investments, and see you next time.